What's happening, guys? I hope everybody had a fantastic week last week. I hope you guys had a great weekend as well. We have another Sunday video coming at you, this time for the 2nd of October and the week ahead. We have some good stuff to just kind of brush upon, but, quite honestly, the edge for me lately has just been sort of waking up, seeing what's gapping up, and reacting from there. And it's been a good week of opportunity. There was a lot of big gap ups, a lot of clean unwinds, but if you got there too soon, SLNO, RNAZ, even something like FEMY, then there was definitely some trades that could have taken you for a ride. So we had some big opportunities, and hopefully you guys were able to capture those. I actually had more on the long side last week than I did on the short side, so that was a little bit of a difference for me. But I just wanted to go over a few things. We will get into the scan. It's a short video again, and then there's a little clip at the end. Some of you guys may have already seen it on Twitter, but just to kind of show you guys what we do on the broadcast every single morning. The goal of Sunday videos, the goal of the showing you this kind of stuff is if it makes sense to you and you like it, then then this might be a place for you. But if it doesn't, that's fine. And if it's not the place for you, that's why we do a lot of different interviews with a lot of different people, and hopefully you find where you belong. I think it's very important to kind of have not necessarily even mentors, but just being part of a community that fits your own personality. And that doesn't necessarily mean it's my community. It doesn't necessarily mean that it's somebody else's. But if I can be part of that journey, and maybe you find out about somebody else through us, then that's what these are about. So again, there's no right way. Everybody's going to have a little bit of a different path. And that's why the market is the market. Just because one way it works for somebody else, it may not work for somebody, for you. And so anyway, let's jump into it. We talked about Avidity Fitness. We talked about the challenge that I had done. I think it was 8 or how many weeks? I think it was a 2-month challenge or something like that. I think it was 14 or 16 weeks in a row. And so we were able to raise $7,500 with that fitness challenge. So I appreciate everybody that did take the time to show up. And like I said, I was going to pick 2 winners for Traders for a Cause. And so Zach and I did that this week, and An and Kyle were winners, and which is great. I appreciate it. And I also really appreciate the fact that, we have a female trader. There's just so little female traders out there that it's always neat to kind of meet new female traders, just because again, it's we have trouble finding a ton of female speakers that might relate to our audience at Traders for Cause. We Michelle used to do Trade on the Fly, the swing trading chat room that we had, and obviously she retired a year or 2 back, but it's always neat to kind of see that other side of the low end percentage kind of to show up and be traders. I always like to see that. And then the annual IU free, that was also I was going to pick a winner for that. That one's going to Carson, which is pretty neat. This guy showed up for the workouts, and he literally lives on a catamaran. And so him and his either wife or girlfriend, I think girlfriend, were working out on the boat, and they just venture around the islands down south, and I think just really a nomad on that thing. So that was really pretty cool, and also he trades. So it's neat to see all the different walks of life and all the different people that you meet through either something like this or Traders for Cause, or the communities. Other than that, like I said, at the end of this, we'll have a broadcast example, so you can kind of see, in the mornings, the in-depth kind of analysis that I kind of go through. And it doesn't mean it's going to be right, doesn't mean it's going to be wrong, but just, what makes a good trade and what are key levels. And if that makes sense to you, and you see that, and you see that trade set up, then you have a trade. But again, if you're looking for somebody to tell you what to buy or sell, then obviously that's not what we're about. We're about giving the best information and the best quality tools, scanners, and all that good stuff. So hopefully, especially the amount of you guys that are in the community, you've seen the sort of changes over the last year where we've been developing all the scans and tools and things that will help you on your journey. So one thing that has happened in the industry is just there's, literally to be a trader, you need to have like 17 different services, not even necessarily communities, but just different scanners, different platforms, different data kind of things. And, we're just trying to consolidate that a little bit for you. And, hopefully you see that. All right. This part of the year is usually when I start to talk about, changes for the new year. Everybody always, kind of pushes it off to the next year. They always say, New Year's. That's a New Year's resolution. But as you guys know, and even my own self, old habits die hard. I mean, it's very difficult to change, what you've done for years and years and years. And, for me, it's been 15 years of, kind of doing the same thing. 20 years trading, 15 years running IU, and it's been really fun, but also it's something where it ties you down. And so I've been working as you guys have seen, just trying to focus on not pushing buttons all day. What are the A quality setups, and focus on those. And then why am I trading the rest of my time at the desk for something else that could be more fun, going out and getting steps during the day, things like that. As simple as that is better than just kind of sitting and waiting for the next thing to pop up to trade. And again, everybody's at a different kind of stage in their career. Maybe that does not make sense for some of you, but if you're still trying to get it and get to that next level, then obviously that's maybe not good advice. But I think that sometimes it's very easy to get stuck in this repetitive sort of rhythm where you look back and it's like another 10 years has gone by and you're still doing the same thing. So again, my goals is always to try to trade the best setups. I trade my best typically 8 a.m., but for the most part I've been waiting until open, unless there's like a really, really good opportunity, like RNAZ this week. RNAZ, you saw me trade that one. There was a huge exhaustion move. There was a big exchange in the tape, and basically what that means is there's a point at which there's just a ton of volume, but then the offer doesn't move, right? And then the bids drop. So there was a lot of shorts that got run over, and then they get to that point of exhaustion, and it's that point of like, oh my gosh, I need to cover, and then it's the immediate, oh crap, I shouldn't have covered, right? And after that happens, that's when I start to get interested. And still, that does not mean that it is time, because as you guys know, sometimes it's just that one candle and then it starts to go back up. So it's very important to make sure that if you do start into that position, it is proving you correct right away. And if it is not, don't stick around. So the next topic that I wanted to talk about was sort of changes for the new year. And this could be trading related, or it could be kind of just consistency in your own life changes, kind of reevaluating things. And so I went over a few of those, and I don't want to just keep going in circles and repeat the same thing every Sunday. But ask yourself, it could be as simple as steps. Are you being as active as you wanted to be? There was a tweet earlier this year. Eduardo had posted his 75 hard. He had lost a lot of weight, cut out alcohol, and was in the best shape of his life, and or at least in the last couple of years. And so that was just that one thing that I saw, and I looked at my average step count on my watch, and I was like, man, I'm not doing what I wanted to do. I'm not doing or checking the box that my goal for the year. And so then I ended up tripling my step count from that day forward. So just a simple sort of kick in the butt from him, who he didn't even text me about it. I just happened to see it. That was enough to kind of get me going. And so that was a big change for me this year. Also, sometimes for people that have trouble with risk, we've talked about max stops before. If that's you, if each week you have this one kind of drawdown where maybe it works out, right? But why do you have that big drawdown? What is it that you need to change? Is it because you're trading the front side? Is it because you didn't have a max stop? Is it because you're getting stubborn? Whatever it is, you need to recognize how you feel in that moment, and then start to work on that. And if your work on it doesn't turn into change, then max stop it. Just get yourself out. And over time, you'll start to build that habit and not really worry about that stop. The stop is the right trade. The stubborn is the wrong trade. And then other things like over trading and sort of reevaluating. We've talked about my alarm clock that goes off every single day at 11:30 a.m. More often than not, I'm just sitting in a trade just because I'm up on it. But is it doing what I expected? Nikola, NKLA, this past week, there was like 3 days. There was a good opportunity, great spot to get in the morning, fades off, and then it's just sideways, right? Sideways for 2 hours. But yeah, I'll stay there. I'll stay sized up. And then it starts to rally back. And each day this week, I think 2 out of 3 days anyway, once it started to kind of go sideways for about 20, 30 minutes, I recognized that and I said, you know what? I'm sitting in this for no reason. And if it fades off, so be it. But I got in expecting it to stay heavy, and it's consolidating. So my thesis is no longer valid. And maybe it proves me right later on, but I was anticipating it to stay heavy. It's not. Why am I still sitting in it? And so just something like that, by getting that alarm clock and saying, hey, is it doing what you expected? And if the answer is no, get out. Then you clear your mind and you can start to focus on the next trade, or you just get off desk if you've done what you kind of set out to do for the day. Also will help with overtrading. There's a lot of A, B quality kind of setups that you might take off the open or in the first hour. Typically 9:45, 10 a.m. plus is really where I focus. And then after 11:30 or 12, is it kind of a diminishing returns? Or are you gonna leg up and make another double what you made this morning, or is there a better chance that you start to give back? That answer. And maybe you're a better PM trader than you are AM trader, but all of these things should be reevaluated. And these are all changes that you can make now and start to make yourself a better trader for next year, rather than just kind of kicking the can down the road and saying you're going to make all these changes tomorrow. And so think about that. That's what's really, really helped me. And you've probably seen it, each day this week even. I had 2, 3, maybe max of 4 main watches. A lot of them worked. And then as they started to consolidate and go sideways, I got out. And a lot of the times they rallied back the other way. So I was very fortunate to go ahead and move on with those trades. So again, think about that stuff. It may work for you. It may not. But if you haven't asked yourself, if you haven't explored that, then you'll never know. So again, main watches. We're going to get into main watches for today. Again, I think that the majority of my trades recently have been waking up, seeing what's there. 7, 8 a.m. I see what's going on. If it starts to ramp up and I think that I may trade it, I borrow. I borrow some stock. Maybe I waste money on that. Maybe I don't. But I'd rather have at least a starter position, essentially, of borrows, just in case they run out. And also, just in case they do run out and they find more and the price of it spikes, at least I have, a good average, a good price to get in there. So that's been sort of my strategy lately. 7, 8 a.m., kind of get a feel for, okay, which names might I trade? Typically in the morning, I post 5 or 10 names of interest. I start to locate the ones that I want to locate, and then I start to zone in on those 2, 3, or 4 main watches. And that's it. So, as always, I am not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. So, first and foremost, we've got PLTR, a very nice rebound off the lows. It went from 14 to almost 17 before fading back. These are the types of trades that, in my opinion, it's just so much less headaches than something, with small caps where you have to kind of be on the desk and be aware that, you're one swipe away from a circuit halt, right? And so you can't really size in, you can't really get super aggressive with these trades because, again, sure, maybe you make money 7, 8, 9 times out of 10, but that one time that you oversize and it's the wrong trade and it goes circuit to circuit to circuit, you've just taken away all that money and potentially more. And that's a different market than it's been over the last few years. It's very gamified now, as we've been talking about the last couple of weeks. So, just an example, RNAZ, great opportunity, fades off. That I think it was 165 or so had been holding last week, and then it gave you all the signs. Hey, reevaluate. It's not doing what you thought. It's holding well over VWAP. Are you still there? Yes. Guess what? Too late, going into a circuit halt. When you see it, kind of holding better than it should, that's your sign. And you have plenty of time to get out. But the problem is we kind of want to wait, kind of see what it does. And then by the time that you realize, oh, yeah, this one's not coming in, so does everybody else. And then there's that rush to the exit, and then it goes into the circuit halt. That's why it does that. So you have to be able to recognize it a little bit sooner and take that chance of being wrong. Maybe you were right, and maybe it was wrong to cover, but it's not worth the risk. You can always rejoin it. So again, PLTR, hopefully we get some sort of morning shove towards the mid 16s or so, and then starts to fade off from there. Otherwise, watch for a pullback. Maybe it flushes under 1580s, and then some sort of rally from there. But it's got 50 to 80 million volume every single day, so it's a very high liquidity name. And the fact that it had a 14 to 17 move, it's got range right now. So it's not a trade that I typically would take every single day, but when it has these huge candles, I'm interested. Same thing with NKLA. Ideally, we see some sort of push up off the open. It's been a great trader lately, and again, the 150 level has been the spot where they keep on soaking. So each morning, it's kind of given a good layup trade where it might pop 5, 6, 8 cents, and then it fades back off, flushes, and then starts to hang on. So that's been a very high probability trade. But if you're sticking around, then you obviously minimize. So that's definitely one to watch, but I think the day that it's going to, maybe unwind is the day that it stays heavy at 150 quite a bit. Then we've got NVOS. Ideally, we get a morning shove. This one had some comments by Hindenburg, Nate, on Twitter, and it's super sketchy. And the CEO made it even sketchier, just the way in which he responded aggressively. So it's going to be interesting, but in my opinion, that was sort of that last-ditch effort to kind of, potentially have some liquidity, and there's a good chance that we see this start to fade off back under the 20-cent level. That said, the shareholder base, no offense to anyone, but I believe the shareholder base is on the same sort of level as say, like the AMC, the apes, right? Where it doesn't matter what Nate Hindenburg says. It doesn't matter what anybody thinks or what the reality is. They'll fight you to the grave, right? They believe in this thing. So what I mean, why that's important is, the eventual trade, the one that, you're likely to be right on, it's kind of kicked down the road. It's going to take a little bit longer. And, you want to, it's not about forcing the trade. You don't want to chase flushes. You don't want to chase that pullback. You want to wait for that setup. You want to be there when it starts to push and it fails, just like the exhaustion moves on Friday. If you're chasing it down, there's a better chance you're going to get chopped up. So make sure that the setup's there. Don't force the trade. And just remember that it's going to take longer than you think because it has a big market. So that's that one. Then we've got next up, failed follow through. Failed follow through obviously is names that I ideally gap up, but I'm looking for them to set up in the formation that we've gone over a million times and have that breakdown under the support, retest back up towards that support level, and then fade off. So, ZJYL has been on the continuation scan for quite a few weeks. And the reason for that was all of the wash volume, in my opinion. And if you look at the chart, if you look at August and September, you'll see that literally every single day was 300,000 volume, like to a T. They're just churning, creating this sort of picture that, it has a liquid trading market. We talked about this in TOP. We talked about this in HKIT. We talked about this on all of this style trade, even RETO and SJ recently. So we know we've identified it as that sort of setup. Now it's just about not stepping in front of it and waiting for the day that's a little bit different. Waiting for the day that it pulls back, and it doesn't just pull back on low volume, but the day that it tries to rebound and it hits a wall of sellers. It tries again and hits a wall of sellers. That's the day that I get interested in. Most people try to anticipate that. And something like SJ this week, goes down circuit. Yeah, it shows all the signs of a liquidation play. But was the volume there? No. Did it actually rebound and try to, rebound and just hit a wall? No. It rebounded and went right into a circuit halt because the volume was so low. So that's what you have to be cautious of on this one. But it's just a matter of time. So some people will try to figure it out and get chopped up, and other people will just keep it on their radar and set price alerts and watch for the day that it gives the edge. And the day that you're like afraid to chase it, that's likely the day that, it's gonna go down. But the volume has to agree. So they've created that kind of market environment where, or that picture that it looks super, super liquid. People start to make decisions based off the average daily volume. They start to get a little bit of shorts in a bind, and then they use those shorts for their exit. We saw that on UPD as well, a little bit of a different trade. Really nice move on Friday. Completely missed it myself, but really nice fade off looking left levels of that 15 area. So I would love to see a morning shove, maybe a buck, and then starts to fail to follow through. But I could see this starting to fade off towards 5 in the near term. The only problem here with this one is the volume. So it's so trade, but not really anything I'm super excited about. Then under the continuation side of things, we've got LFMD. This has been a dip buy idea over the last couple, or at least the last week. It was on last Sunday video. It was on Scan Each Day this week. So you can see the wicks that are in the daily chart. You can see how it pulled back towards 5 and got soaked back up. You can see it pulled under 550, got soaked back up. You can see it pulled under 6 and got soaked back up. So point is if you're chasing the breakout, obviously that's a bad trade. But look for pullbacks. And as long as this continues to go, it can keep on going and going and going until we have that day that it speeds up, that exhaustion move. And if you need an idea to look at, just like I said last week, look at FNGR. Then we had FEMY on Friday, long idea. And we talked about it on the broadcast about where I was looking for it to trap, where it started to kind of firm up, and where I would risk towards. That one worked out perfectly, held all day, and basically pieced out throughout the day into the 350 range. I'd be looking for maybe a flush off open, 280s to sort of hold, and then possibly another push back up towards 320, 350s. I'm not sure that shorts are out yet. I think there was a huge buy-in on Friday. I know that Wedbush was restricted for a lot of traders. And so typically what that means is, Centerpoint delivers shares, right? So you're not going to get bought in on stuff. But there's other brokers that are out there which, if you're swinging it, sometimes you're faced with a buy-in where you have to buy in at the open or you choose to get bought in at VWAP throughout the day. Sometimes that works for the better. Maybe it's the fade day. Other days like FEMY, it screws you. You should have probably just covered at the open. So that said, I think that there's a lot of fresh new shorts, and although it did have a nice pullback back towards 3, I think that there's fresh shorts that held that if it does not break down, we could have a nice big reversal back up towards 350 and potentially even more, even up to the 4s and beyond. So we'll see. But it's still on the continuation side of things for me. I'm not super bearish unless we have some sort of gap up where it maybe retest 320, 350s, exhaust out, and then fades off. A couple other watches, MNTS, just the volume bar. It could be a one-day wonder, but I'd be watching to see if this starts to develop some sort of liquidity trap or something like that. It's been a good one in the past, and I do think that there could be potential here. Groupon, you guys know I've been talking about this one. Clean breakout now over the 14 level. That was the breakout we were looking for. Looking left, it was kind of peaked out in the mid 13s, and once again, you can see actually on Wednesday it kind of pushed up towards the 15 or the 14 mark and faded right back down. That's what happens when you try to anticipate a breakout. If you're buying dips, it's a lot easier. But if you're chasing the breakout, a lot of times it just has that kind of transitional day where it kind of ramps up and sits back. Everybody thinks, okay, nope, it failed. It's going to unwind. Heck, I even thought that. And then next day it absorbs. And then the next day it absorbs. And then it squeezes out everybody that thought that Wednesday was the day that it was going to fade, and it didn't. Last couple, GRTS, potential liquidity trap forming. It's not necessarily a liquidity trap kind of situation, but I do think that the volume is going to start to fade off for a day or two. And if it does start to build over 175s, I do think it could turn into a liquidity trap. So we'll see what happens, but I think that 175 base with a 2 trigger is what would sort of open that up. And then we've got Joule, JWEL. Everybody should be familiar with this one. It was a liquidation trade back in the day. What I've noticed on a lot of these is they start to walk them up, and it's like 30, 35 cents, 37 cents, 40 cents, 50 cents, you know, and just keeps on going and going and going. And then one day we have the big disaster, just like CLEU, RETO, and all those other trades that came up from nothing. So that is it. And again, you know, I'm going over, you know, ideas, bigger picture type of ideas. Right now, I think that Scan is more of a bigger picture kind of setup environment rather than what's in play for tomorrow. And that's just, we're in a different market cycle right now. So like I said, I'm showing up 7, 8 a.m. to get a feel for what I might trade, get the proper borrows for it, and then as things progress, start to figure out the 2, 3, 4 main watches that I'm going to trade on the day. So again, there's times where I feel like Sunday video is like, you know, this is the one, this is an A+ setup. And then there's other times where I feel like it's just kind of understanding what sort of cycle we're in, what might be potential plays later if nothing shows up. But for the most part, right now, all you got to do is show up and kind of get a good feel for what's going on pre-market. And I think you can compound a couple good days. So I think that's it. And again, like I said, right after this, we're going to have the broadcast from 8:50 a.m. On Friday. You can see if that's something that helps you, that fits with your own personality, that you think that, you know, you could get a benefit from. But again, if not, check out the YouTube channel. Check out all the different interviews that we have with different people and see who fits your personality. All right, guys, so that's it. Have a great rest of your weekend, and we'll see you in the room on Monday. All right, guys, so today is 29th of September. We've got some good stuff, a lot of cheapies. First and foremost, we've got ICU, we've got NVOS, we've got OPGN. But those are the main ones, and all kind of the same thought process. You know, right now there's not really too much edge. I think if you just kind of look, sort of an extension up towards the 56 level, and we've got kind of a base, you know, in this maybe like this 40-45 range. So I think it's pretty clear that if you're bouncing around in here, then you're going to get chopped up. And so we want to see some sort of exhaustion move over the 56s. Otherwise, if we start to kind of fail to follow through at 50 cents, then we have the potential of some sort of unwind from there. If you start into it 52 cents, that's fine. But if you're going to blow up, if you're going to stop at 56, then don't bother. Let it test 56. Let it at least push up towards that level before you get, you know, participate in that opportunity. So I think that's the key level for blow off, and I think this is sort of the sentiment shift for, you know, that potential failed follow through. FEMY, this is sort of a you know, yesterday was maybe T+2, but then we got another round of T+2s, and then maybe even on Monday, you know, from yesterday's shorts would be a T+2. T+2 just meaning, you know, you've got shorts that there's so many shorts that are lent out. If there's a failure to deliver, so that kicks the can down the road, and as the buy-ins come in, they're either going to get bought in at open or they get bought in VWAP throughout the day. So at any rate, we still have that potential today and again on Monday, just because of the amount of volume and the move. So I'd love to see this pull back. I'm not really short biased. You can see that 180s is holding pretty well. So what I'd love to see is it flush under the 180s and then kind of do one of these again after open and then start to come back. And if it does and it firms up, then I'm interested. So this would be an ideal kind of flush zone, you know, maybe like 180s to 170s. Then if it saves real fast, if it gets, you know, swiped right back up, then we know that they're probably in the tape. And if it starts to build over 180s in VWAP, then I see as a potential breakout trade. And where it would have sort of wings, in my opinion, is over that 2 level. And you can see it exhausted out, you know, a couple times over the 2. So again, this might just fade right back, but if it does a little bit of a flush and comes right back up, that goes on my radar for the potential build for a squeeze out into maybe 9:45, 10 a.m. plus or after that. So NVOS, this one had a huge move after hours, and I know a lot of people were talking about, I think the reverse split vote is today. I saw a lot of people talking about it yesterday. Very clean. Again, hindsight, this is, you know, I didn't take this trade, but I like to kind of put these things in front of you guys so that you start to see it. You know, what makes a good entry, what makes a good, you know, potential trade. You've got this big move, come back, exhaust out, and fails, right? So pretty clean. High day kind of clear out, or at least retest and then fail. We've got a lot of support at this level. Obviously, it's under it, but as you guys know, sometimes it goes under that level, comes right back up and starts to grind. So 36, if it has trouble and peaks out there, I think it can stay heavy the rest of the day. If it starts to firm up and take out VWAP, I think that, you know, over maybe this 40 level is when it could have some fun. So if I was going to trade this, I'm going to probably be short bias in the event that it does like a 36 to 40 kind of push and then fails to follow through. Ideally, we get that exhaustion move into the 40s and then we start to fade off. So very similar to the BNOX trade yesterday. And then we got ICU, which went up and came back down, and we're grinding along. Obviously, it is stuck in this channel right now. So we're pretty much, you know, kind of the majority of the volume's 34 range, and most of the exhaustion is over this 42 range. So if you're trying to figure it out in between here, I think you're, you know, asking for it. It's a cheap name. It could circuit. It could do lots of stuff. So again, more it trades over 42, I think there'll be opportunity. And again, I think fail follow through is under 34. So again, I'll post if there's something that sets up there, but reactive trade on that one. Top watches, OPGN, exhaustion zones are given. NVOS, higher the better. Ideally 3640, exhaust out and fade. And FEMY, watch for that trap under 180s and potential blowout. And ICU, I think will be a good opportunity, but just be cautious front side. There's a lot of these. You saw it on BXRX yesterday. If you got too heavy, too fast, when the ranges are close, when the price, the bands, the circuit bands are close, you know, you put yourself at risk and you're going to panic out and then you're going to ruin the trade. So make sure that if you're trading front side, you are small, let it exhaust out before you put any size on. And I think that's about it.